Hey, good morning, everybody. It is Monday morning. Hopefully, you're off to a good start of your week. My name's Brent Moores. I'm sitting in for Kevin Horner today, and I'm joined by Jeffrey Avalos today. Glad you're all here. And before we get too far into this, let me just welcome you, Jeffrey. Thanks for joining me today.
Well, thanks very much for having me, Brian. Always a pleasure to collaborate with you. Looking forward to our show today.
Yeah, absolutely. So, everybody, we're glad you're here. Just a reminder, you can, if you're watching live, we have a chat going. Feel free to type questions in the chat. Jeffrey and I will do our best to get your question answered. And also, Connie is in the chat, Connie Hill. And so we appreciate Connie for all she does. And so Connie will help us out for those questions that we can't get to as well. And if you're watching on a recording, we're glad to have you as well. Now, you can follow Connie or myself on X, formerly known as Twitter, at BrentMooreCS, at Connie Hill CS. And before we get too far into this, because we got some interesting stuff in the markets today and over the weekend. But before we get too far into this, let me just remind everybody that the information today is for general, educational, and informational purposes only, and it's not personalized investment advice. And so we'll look at individual stocks today, but realize those individual stocks are not recommendations. The Paper Money software application, we'll be using the Thinkorswim desktop software. That's for educational purposes only. And Schwab does not recommend the use of technical analysis as the sole means of investment research. All investing involves risks, including loss of principal, and past performance is no guarantee of future results. So, having said that, what are we going to do? Well, we're going to do what we typically do in this webcast, and that is we're going to look at the trend of the major market indices. We'll look at individual sectors, and we'll look at some of those things that are driving the market. Oil is of interest. I think interest rates and interest rate projections are of interest. We got earnings. We got a whole bunch of stuff. But what we're going to do here is we're going to start with the S&P 500. For everybody's context here, I do have a 20-day that's in the red and a 50-day moving average. But I'm seeing a general uptrend here, Jeffrey. If I were to, try to identify, say, kind of maybe, some support levels, I'd probably say, well, we had this high here that we got pretty close to it there, and then we bounced like off it there. What are other levels, or what are your other thoughts on this chart here, Jeff?
I think that's a really good call out. That's probably one of the supports that a lot of traders out there are seeing. You've got one, two, three different resistance points previously. And now the fact that it also coincided with the 20-day SMA, Brent, to form
Yeah.
a potential support level, certainly in the near term, is probably where a lot of traders are going to be keeping their minds. Now, just big picture, September has historically been a fairly weak month. It's actually one of the few negative months that you see, depending on how far back you want to go on the data. So I don't know that a lot of traders are going to be expecting big things to come from the month of September this year, but certainly we'll be keeping our eyes to make sure, well, just because we look for potential softness doesn't mean we want to see a breakdown.
Yeah, absolutely. So we'll see what happens from here, but there's some levels to look at on that, and you can see we have seen some weakening on the RSI here as well. Not surprising, not at like again, the market has been fairly relatively bullish here on this. But what's of interest to me is this is if we look at this, the S&P 500, and compare that to the S&P 500 equal weight, we see the equal weight actually, and I'm just going to toggle back and forth for one sec. If you look at the chart on the equal weight, so that's the S&P 500, has been a lot more steady than the
Yeah.
S&P 500 as a whole. And so we have dipped below that 20-day moving average, but a little more volatility in the S&P 500, the main S&P 500, a lot of that perhaps from more like tech stocks, perhaps Jeffrey, is that
Yeah.
your thought on that?
Yeah, a little bit of a transition from semis to software we've seen recently,
Yeah.
Brent. And then also keep in mind too, for the viewers out there who aren't familiar or don't know about the equal weight, you generally want to see breadth start to expand. So you would like to see in a healthy economy the equal weight doing as well or better than the regular S&P 500. What this tells you is every part of the economy is doing well instead of just well, the tech sector again is lifting all ships, so I guess the S&P 500 is going to do well. In this case, this steady upward movement is sort of what you want to see if you're looking for a more healthy economy, Brett. But it's certainly something that's going to be kept an eye on as things start to shake out in September. Folks might say, "Well, let's look for some cracks. Let's find that canary in the coal mine and see if something may transpire here."
Yeah, absolutely. And just for those of you who are interested, if we're as we look at the kind of intraday chart on this is back to the S&P 500 as a whole, you could see we've dropped below. This is just a minute chart. Obviously, the market just opened, but not great from the get-go here,
Mhm.
Jeffrey. We've had a drop, mini gap down, and maybe we'll pick up some support at some point here. I'm sure at some point we probably will, but we're below the S1 level, S2 level. These are pivot points, by the way, for those of you who aren't aware, that we can use for kind of support and resistance levels. Maybe this is where we're headed. Maybe we'll get a turnaround before then, but a little weakness out of the gate here on that one. Okay, let's move on and let's just take a look at that NASDAQ here. Here's the NDX, and you can see much more choppy on the NASDAQ. Uh, Kind of a neutralish pattern. I mean, I guess I'd say we probably have some support in this area on the NASDAQ. We probably have some resistance in this area. Now, if I want to pull it out a little farther, we could say, well, we probably have a little bit of resistance up if we break above that. That's not a perfectly straight line. I apologize on that. And if we get down here, that's not a great sign on things. But right now, we have we have a streak that goes up, a streak that goes down, up and down. And that seems like, what's going to break us out of that? I don't know, but we'll see. Part of it is, the NASDAQ is, well, let's take a look at the NASDAQ because you mentioned a couple things on that in terms of the sector representation here on this. Let me just switch this to excuse me, well, subsector, I guess is what I'd say. Here's the NASDAQ as a whole. But if I go, actually, I'm going to go to the S&P 500. I'm going to just click on the IT sector here. And what we can see is we can see a pretty big difference on this between semiconductors. Okay, so here's semiconductors right here, all in the red. So we're off to a not a stellar start here on semiconductors there today. And software, which is here, which is kind of a mixed bag here, I guess, on this one is how I characterize that. Any thoughts on this?
Mhm. Yes, it's still, again, I think there's more of a semi to software rotation that we're seeing despite some of the weakness in software this morning. You can clearly see, though, as Brent pointed out, everybody, semis are just red everywhere. You're not even
Yeah.
finding a patch of green to try to give you an ounce of hope for that right now. Whereas software, you've got a couple. You've got Now, you've got Salesforce. They had a pretty good earnings last week. You got Microsoft continuing to do well. So there's a little bit of a rotation inside of the tech sector right now. But Brian, I wouldn't try to extract too much from this. I still think overall, as you pointed out on the NASDAQ, very neutral looking trend right now. This could be good for those of you who are trading a mean reversion type of strategy. It could also be good for those of you who like to do neutral strategies, and this can go beyond just the equities market. So, like you said, those resistance and support levels are probably where people are going to be eyeing up, especially that 30,000 level. Any psychological number seems to get a lot of attention out there. But certainly what you do not want to see is a break below that previous bottom that we hit back in July, especially on the new data that came out this weekend with the US and Iran.
Yeah. Yep. And we'll get to that in just one sec. Here's the level that Jeffrey was talking about right there. Let's look at small caps, and then we're going to start. Then we're going to need to look at some things that are driving the markets today a little bit more. But small caps have been pretty resilient. General trend on these small caps. Let me just get my moving averages on. Again, we're kind of breaking through some moving averages. I think for small caps, we were probably from a technical standpoint looking to hold this 50-day moving average, which is where we had some lows on. Well, today's a weekday. All three major indices are down a little bit today. Next level, I'm guessing probably kind of in this area here that we'd
Yep.
be looking at. And everything just seems to be weakening. We can see some weakening in the RSI here on this as well.
Yeah. Yeah, really good call out. Why does this happen for the viewers out there that aren't familiar? When interest rates go up and when there is a speculation that interest rates are going to keep going up, I think the Fed index is now at 62%. They have a raise in September. That's when you start to see the smaller cap companies get a little bit of worry behind them. So when interest rates are rising, generally speaking, you're going to see a corollary falling in the Russell in the small cap space.
Yeah. So this is the 10-year. This is the 10-year note. And this is the interest rate. You got to move the decimal point over if you want to see the actual rate. High today. So
Yeah.
you can see the general trend. And, each time we have a dip down, I'm thinking, oh, well, I am hoping this kind of represents a top. Well, we haven't seen that as well. So
Yeah.
there's some news. So last week in Wyoming, in Jackson Hole, Kevin Warsh spoke, and interest rates rose on that. And he said, this is just quoting Kevin Warsh, well, this summer's PCE and CPI readings, those are inflation readings, were better than expected. They do not tell me the underlying trends have meaningfully improved. He continued, we must be confident that underlying inflation is moving to our objective clearly and at sufficient speed. Otherwise, we will have work to do. That's our job, our mandate, and our charge to keep. So with that news, that seemed to move up interest rates. And as you just alluded to, Jeffrey, when we look at the Fed, this is the CME Fed Watch tool, third-party site. So, and it's just looking at Fed funds futures, and it's looking at Fed funds futures, and it's not a guarantee, of course, as to what's going to happen here. But
Right.
this is for the September meeting right here. If we look at where it is right now, as to compared to where it was a week ago, So here's now 65% chance odds, according to this, of a raise. So that's right there. A week ago, it was showing 40% chance of a raise, and actually, it got lower than that a
Yeah.
few days before Kevin Warsh's speech. But so we're seeing a shift there on that. So anyway, any thoughts on that there, Jeffrey?
Well, there's no guarantee, like you mentioned, Brent, but it's speaking to the overall tendency of the market. Oh, okay, wait a second. This person was supposed to be a dove. They weren't going to be raising interest rates. They were
Yeah.
potentially talking about lowering them. And now they're saying maybe they have to raise interest rates. Anytime you have those shocks, that really starts to move the market a little bit. And in this case, it's going to be that treasury yield. So seeing that, again, that's where the corollary between higher interest rates are going to lead to a potential decrease in the Russell and in small caps. So I don't think it's anything that people weren't expecting. I think the language was a little unusual, but I don't know that this has dramatically shifted the conversation of the trajectory of the Fed's funds rate.
Yeah, absolutely. And we had a comment in the chat, which is a very good comment, and that is, hey, look, interest rates have been going up a long time. The Russell has outperformed during that time period. So
Yeah.
I'll give you my thoughts on that. And Jeffrey, you can disagree with me or tell me what you think. And that is, there's a lot of things that can drive small caps. Interest rates is one of them. And when we have a big shock, it tends to move small caps. But even though interest rates have been moving up, and it has been a little bit surprising that small caps have gone up at the same time. because that's not what you normally expect. So it is a little bit odd. However, one thing is if the economy is strong, there's a lot of things that drive small caps. One of them is interest rates, but another is just the strength of the economy and the strength of the business. And I think this was just a testament to the fact that people felt more strength in the economy going forward right now, even though there's some challenges with oil prices and stuff like that. And that ultimately, the prospect for a stronger economy drove small caps more so than the interest rates wore them down a little bit until we kind of had this shorter term, at least, we'll see, move in interest rates. Anything you want to add on that there?
You know, that's a really good call out. And for those of you who have watched the show with me and Kevin Horner before, that was one of the things that was a real conundrum that I just couldn't seem to wrap my head around.
Yeah.
Why are small caps doing so well when interest rates are continuing to rise? But I think, Brent, you probably hit the nail on the head. I'm looking at the NFIB Optimism Index right now. It's at 99.8. That's up 2.4 points, highest since August of 2025, above the 52-year average of 98. Hiring plans are also doing well. 20% plan to extend payrolls in the next 3 months. Inflation cited as the number one problem. That's also fallen to 14% of owners from a previous higher number. And then the employment indexes rose to 102.1. That's the first increase after 4 straight monthly declines. So I think, Brent, you probably hit the nail on the head for the viewers out there. Despite the fact that interest rates are going up, there are undercurrents that are much stronger and more positive for the smaller businesses out there.
And a stronger economy means there's less compelling reason for the Fed to cut rates. And
Yeah.
so if you have a coupling of inflation concerns and a strong economy, that's going to typically tend to increase rates here. Now, one last thing Lakshmi pointed out in the chat, can we do technical analysis on this and call these some resistance? Yeah, you can. Maybe a breakout here. We'll see. Obviously, there's a lot of forces that dictate what interest rates are going to do. But if you're using technical analysis, I don't see why you couldn't. Because keep in mind, you may go, well, that's an interest rate. You're doing technical analysis on this. But keep in mind, this chart here is it's derivative, but it's just an inverse of the price of the 10-year note. And we can certainly do technical analysis on that. And so if we just flip the chart upside down, essentially that is what we'd be looking at. Now, I want to shift gears to something that is definitely in the news today here, and that is oil. Now, this is the future. We're not talking about trading futures today, everybody. We're just looking at the price of oil. And I got a lot of, let me just clear this drawing set here just because I got a lot of stuff on it. But here's the oil. We've been kind of going up, spiking up about 3.5% today there, Jeffrey. Well, there's some news over the weekend here. And so a couple things. One is there's a couple different things on terms of oil that we're talking about. One is there was an increase in action, military action, we'll say, during the Gulf, and that's been kind of an on and again, off again type thing here with driving oil. And then also there was the news out of Venezuela, or I guess the news from the White House. I'm quoting President Trump here on social media. He said, the United States of America has just entered into an agreement with the country of Venezuela on the biggest oil deal in world history, in all caps, of course. At my direction, Secretary of State Marco Rubio and Secretary of War Pete Hegseth worked closely with highly respected interim president of Venezuela, Delcy Rodriguez, and through a partnership with private businesses have secured a majority of U.S. control that more than 65 billion barrels of proven oil reserves in Venezuela, no cost to the American taxpayer. This historic transaction more than doubles U.S. or American oil reserves, and so on. I won't continue that. So Russell says in the chat, serious doubts about that deal. I'm not going to comment as to, whether something's going to come to fruition or not, or, it's all that it's, all that's it's been advertised to be. But clearly, we do have some pressures moving oil here on this. Any thoughts on the chart or oil in general here, Jeffrey?
Again, I've talked about this in previous shows and broadcasts, Brent. It's a very headline driven experience.
Yeah,
So if you're going to play oil, if that's a sandbox that you want to be in, just be very careful about your risk to rewards and know that at any moment, the efforts that you put into technical analysis can be completely blown out of the water by a news driven headline. So watch out for that, everybody.
yeah, absolutely. So that's true with any technical analysis. Before any news event, you may have
Yeah.
a perfect resistance level, and then an earnings comes out and it blows through it. That happens. I
Yep.
mean, it can do it without news, I guess, but that seems to be the more common uh, time that happens. Now, of course, that's going to here's heating oil. So this we use this to kind of see the price of oil, not just heating oil, but this is more of a proxy for diesel fuel, for jet fuel, and you can see big spike, 4% on that. And what about gasoline futures? Here's gasoline futures. Of course, you have a refined product. Ah, not a huge change here in gasoline futures. And I'm trying to remember back uh, we had a nice big drop in RBOB here. And again, all these futures, we're just not talking about trading futures. We're just looking at the price here. We had a nice little drop there in gasoline futures. I'm not sure if that's related to the Venezuela news or what on
Yeah,
that.
good question. I'm not sure. I'm
But
not too sure either to chime in.
yeah, so anyway, there's that. That's the oil markets. We also have seen a reaction. Um, let me go and I want to just bring up um, uh, my my brain is not working here. Um,
It's a Monday. It's expected.
sorry, I'm trying to get our
Yeah.
dollar chart up here.
Oh,
Um,
DXY.
thank you very much. Yeah, that's it. DXY, thank you very much. I was doing DSY, not DXY. So here's the US dollar index. So um, this is, we've seen weakening in the dollar. Now, recently we've actually rallied back up, but we had seen weakening in the dollar, and this can certainly affect things. So we've had a short-term rally in the dollar, and this is just a dollar compared to a basket of other currencies here. But you can see its effects, the weakening of the dollar, when we look at other things such as the price of gold. So gold was going up while the dollar was going down, and then we just had that big spike in the dollar in terms of strengthening of the dollar, and gold goes down. So there is a general inverse correlation, everybody, when you are looking at the dollar and gold or other commodities typically. And that's what we've seen lately. It doesn't always happen. And if you ever want to check that out, what's the correlation here? What's the correlation between two different asset classes? You can always use a correlation study on the chart. So how do you do that? Go to your little flask icon there if you want. You go to correlation, and it's alphabetized right there. And you can just add that in. And let me just double click that on that. There we go. We're going to apply. Okay. And then what we can see, and I'm just going to kind of make this bigger here. What we have here is we have a correlation coefficient. So this is basically a Pearson correlation here on this. And what this tells us is a 1 means they would be perfectly correlated here. And now this is actually to the S&P 500. So you can change that if you want. And how do we change that? Well, let me go back here, and I'm going to go back to the gear, and I'm going to go to my correlation, and I'm going to go to $DXY. Okay, we're going to add that in, and we're going to click on OK. apply, okay. And now when we look at this, what we're going to see is, hey, it's a scale between 1, which is kind of off the chart up here, and -1, which means they would be perfectly negative correlated at a -1. In other words, one goes up, the other one goes down. This is backward looking. It's not a guarantee of what's going to happen in the future. A 0 means basically they're independent events. Okay, one goes up, it doesn't tell us as to what's going to happen between the other one. Most assets, most stocks, stuff like that we look at are going to be positive correlated with each other. So they're going to spend most of their time above the 0 level. But here you can see, at least over the last, this is just the last 6 months, and again, different time frames will tell you different things. Most of the time has been in this negative correlated zone here between gold and the dollar. Now, the default here is the SPX. But my point isn't just this. I could have just told you this, but I want you to understand the tool here that you can use in the future. You can use this tool when you want to compare any two assets. Very commonly we use the S&P 500, but you can make it whatever you want. And you want to go, what's the general correlation between those? Are they positive correlated or negatively correlated? Just remember, 0 is independent. So if we're below that, that's a negative correlation. And then you could say, well, is it highly negatively correlated? Well, then you're going to look like in the maybe minus -0.6 or 0.7 or more area. That is, I don't know, that's how you can add that tool onto your Thinkorswim. I find it very handy. I use it a fair amount when I want to look at things, but just realize correlations break down. And so you just need to be careful with overly generalizing these type of things there. Okay.
Very good explanation, Brent.
Yeah. So let me go and just mention something. I saw it earlier. There is a survey link in the chat. So I appreciate you all. If you have feedback for us, feel free to type that. It's a quick survey, and so there you go. Let's move on. And I want to look, Jeffrey, at the earnings calendar because we actually have we're mostly through earnings season, but we actually have some earnings that are coming out here this week that I think are notable because, we had one last week in NVIDIA, and we were talking earlier about how semiconductors have not been so hot lately. Well, NVIDIA on that one day at least was actually pretty good. But let's go to the Market Watch tab and let's go to the calendar. And I'm just have S&P 100 earnings here. And today is August 31st. Well, let me go to S&P 500 here. So I'm going to narrow this down. Public. We want S&P 500. We're going to go scroll down to August. Let's just kind of look at this. Why am I missing?
Yeah, that's interesting.
Why is it? Well, we're having a little issue here on this one.
That happens.
So that is, let me just switch here real quick.
Okay. As you're doing that, Brent, I'm gonna just talk. So some of the ones that are probably on a lot of people's minds for the viewers out there, Dell comes out this week. Broadcom is going to be coming out this week. Snow, Lululemon, a few others, but those are probably the big ones that are coming across the docket. But I think, Brett, you probably hit the nail on the head. Most of the earnings have been done for, and the NVIDIA one kind of caps off of one that I think a lot of analysts are looking at. And overall, this has been a very positive earnings season. I mean, the beat rate is incredibly high.
Yes.
Also doesn't leave a whole lot of room for upward trajectory either, does it, Brent? It's like when the news is that good from a historical context, what do you have left to try to beat? It's very hard to hit world record after world record after world record if you're somebody in the Olympics. So this may be a tough earnings season coming up after this one.
Yeah, we'll have to see. So I just looked at it in terms of the month view instead of the list view here on this, and it did seem to. So as Jeffrey mentioned, there's Dell, there's Palo Alto, there's Broadcom right there, HP Enterprises, and Lulu, for example. So, and then as pointed out by Sam, I think in the chat, you could also go to the public watch list, earnings next 7 days public watch list. That would work too. So
Good
anyway,
call.
I wanted to kind of show you, there's a few different ways of doing that, but there we go on that. Let's talk about some stocks perhaps that are in the news. And we had some upgrades and some downgrades here, and I'm just going to go to those. So here's an upgrade that we've seen. This is on Deere. And this is just a reminder. Here's my 20-day and my 50-day moving average. We had a chat that said from Brownskin B, so you use EMAs as your support and resistance levels. So for support and resistance, what I'm doing here is I'm either drawing horizontal support or resistance levels off previous levels that we've hit, such as on this chart here on Dell, I may go, well, we kind of hit up here and we bounced off that same level. And then we kind of broke through that. So, or we'd go down here, horizontal, we bounce there, we bounce there. Or if I can draw trend lines, or, we haven't done any today, but Fibonacci levels, or moving averages. Are these EMAs? No, these are actually SMAs, simple moving averages. You can absolutely use EMAs. You can use whole moving averages. They're just quicker. So exponential moving averages are quicker moving than simple moving averages. Whole moving averages are just quicker than simple moving averages. In fact, you can get pretty close to one another by just changing the time frame. Just use a shorter term simple moving average, and you're probably not going to be that far from something that's slightly longer term exponential moving average, and so on down the line with the whole moving average there. So anyway, there's that. So here's Deere. Baird upgraded Deere to outperform from neutral with the price target. This is a significant price target raise to 800 from 640. Okay. So the firm says that Deere is the cleanest setup in the sector. And so, hey, that's a very positive note. And it seems, sometimes on these, we see it upgrade and the stock goes down or vice versa. Sometimes the stock doesn't seem to care what the analyst says. But in this case, hey, up almost 3% to that's a significant move here on that.
Yeah, their earnings announcement too, to give a call out on why they might have changed their perspective and gave them such a strong rating. Their earnings, they talked about the AI transforming their business and them being a big beneficiary of that, saying it could save them a lot of money, but it could also advance their technologies much further than they had anticipated. So I think that's potentially, Brent, why we're seeing Baird give such a strong outperform on something like a Deere right now, because you did not hear that from other companies in the space. Caterpillar didn't have the same positive announcement that Deere did. So that may be where some of the divergences occurring versus
that's
other.
a good call out there, Jeffrey, because here's Caterpillar and it's actually down today, down about 1% today. So huge difference between those two. Here's another upgrade. Okay. And this is an example of one where the upgrade didn't seem to make much difference. This is Estee Lauder there. And so this is CICC analyst upgraded Estee Lauder to outperform from market perform. It's funny the names they use, outperform versus buy, or market perform versus hold. Anyway,
long
it's
or
kind
short.
of exactly same thing with a $122 price target. Well, the market, no change in this one at this point. We're having a pullback on that. Let's look at a couple others. Let's look at least one other. Here's Titan Machinery. Nice. And this, we just had earnings on this, but Baird upgraded Titan Machinery to outperform from neutral with a price target of $29. That's significantly above where we're up from $20. And then while we're on the Baird upgrades here, They seem to be affecting the stocks more than anything. Here's CNH Industrial, upgraded by Baird to outperform from neutral with a price target of 15 up from 11. So again, significant price target move, significant move in the stock here. Now, there's downgrades too. So let's look at PG&E because that actually had a fair amount of analyst action on this. And wow, so that's a
Yeah.
big drop there, if you guys can see that. So let me just read this. Wells Fargo downgraded PG&E to equal weight to equal weight from overweight with a price target of $24 down from 25. Interesting downgrade, price change there. It was
Yeah.
at 25, which is like way off the chart up there, and they changed it to 24, just a little bit less off the chart there, way up. And the same thing. This is a lot of this is related to like the wildfire
Yeah.
liability standpoint on PG&E. And in fact, you're in California, Jeffrey.
Yeah.
Am I not mistaken on that? And
You're
so
right. Yeah.
you'll hear this news a little bit more
Oh
than
yeah.
us out here because that's where a lot of the liability comes from. Is you have these wildfires and they come up and you get a wildfire sparked by the infrastructure there.
Yeah, everybody in California, whether you're a barista or somebody that's in finance, is an expert now on insurance and payouts and what's happening with utility companies. So it's something that gets talked about a heck of a lot. People have very strong opinions about what's going on. But Brent, when we're looking at this, very surprising movement. The earnings announcement didn't produce nearly the same movement as what we've seen over the last 2 days. So I think there is a digestion that you may want to do. So we talked about Wells Fargo analysts. There's probably others that have more commentary that could be driving this even lower because generally speaking, but this is as well as anybody, you normally don't have one analyst that can move the market that much. And they didn't say they expected $10 price target. They gave it a $24 price target and moved it to equal weight. And we're seeing a big movement like this. So this might be a story for those of you, especially in California, if you want to see what's going on with this, give a look at some of the analysts that we have either on schwab.com or here in the Thinkorswim platform. Try and take a look at the reports. Don't just look at the ratings. Get in there, dig into those reports.
And if you want more news, because it was also downgraded by BMO Capital and Mizuho also downgraded at the same time. You can always use your live news feature on the Thinkorswim desktop software. Obviously, there's a lot of other news stories out there on that, but you can go through and read some of these articles. You just click on them when you want to look at those there. Okay, so there's some downgrades. There's upgrades as well. And in the remaining time here, let's just kind of look at our sectors here because we've seen, here's energy. Energy doesn't always go lockstep with oil by any means. In fact, it certainly hasn't for a while. I mean, we didn't have this big a move. But today, yeah, it seems to be driven by those oil prices here, Jeffrey. And we bounced right off that 20-day moving average. We had a high here recently. Are we going to break above the new high? Any thoughts on that?
Keep an eye on the news. I think that's where a lot of attention is going to be paid. It's Chevron, it's Mobil, it's Exxon, it's Shell, it's BP. Those are the companies that are driving what's happening, all oil companies, as you know. So keep an eye on the news. If the conflict continues to escalate, then I would anticipate for a lot of traders out there, they're going to expect the energy sector to break above that 1,000 level. If it de-escalates, everybody says, all right, let's let cooler heads prevail. Let's calm down. Then we're probably going to see a little bit of a pullback. But Brent, I would personally be keeping an eye on the news if I was a trader in this market.
Yeah, absolutely. Now, we also mentioned, we looked at gold charts earlier. And we saw the strengthening here. Here's materials in general. And you can see the strengthening and then a little pullback. And of course, I'm not going to bring the dollar chart back up, but again, we kind of had that inverse correlation there on that. Materials, strong month, little pullback here today though on that.
Yeah.
Okay. So other standout sectors, healthcare has been doing really well. That's been another one of the real strong performers this month. Little pullback, but not a surprise, I don't think, because look, when we're doing technical analysis and we're looking at a trend like this, and we've used this 20-day moving average for the most part as support. It goes up and then it kind of pulls back down. It goes up, and that was a mini pullback, but down, up, down, up, down, up, down, up, down. So when we get this separation between the price and the moving average, don't be surprised when we have a little sell-off and we go back down to the moving average. Similarly, and this is no guarantee of the future, I don't know what's going to happen. Similarly, though, don't be surprised when we have these shorter term pullbacks, which we'd probably call like a flag. We'd probably call that a bull flag. When we get a bounce off of that. Look, stocks don't go up and just keep going up and up and up and up and up, or industry groups either. It's breathe in, breathe out. That's what we've seen here. So I think a lot of technical analysts would say, look, yeah, we've had a few days down in a row, but the general trend has been up. This hasn't broken the trend yet. And that's when we start breaking the trend, that's a different story. How do we know when we break the trend? Well, we can look at some different things. This would be kind of a little bit of a flag here if we start to break below, by flag, red flag, I mean, so to speak, if we break below the 20-day moving average. We also probably have some support in this area, kind of same coincident area there. And then we can look at other levels below for a more thorough break of the trend. But anyway, that's how we're going to look at this, I think, is from just a technical standpoint. Healthcare, obviously, it got helped by that Moderna news that came out. But even before the Moderna news, that was the cancer, the melanoma news that came out. But even before that, healthcare was doing really well in the markets there. Any thoughts on this chart here, Jeffrey?
I think that's a really good call out. So you do generally see a pullback. So if you go up, you find that support again. One of the best performers, though, and this is according to Thomas Volkowski, is if you have a company that jumps up and stays up. That tends to be one of the best performers in a chart pattern that he looks for. But I think it's more common for traders out there to not expect something like that rare. Really good call out right here. Gap up, stay up. So this is where he says these tend to be some of the better performers, having a higher percentage of times where they stay up and having less failures along the way. So it's very uncommon to see that. But when you do see that, Volkowski notes and makes mention that this is generally a chart pattern that seems to perform better. Now, in this case, you have a gap up, stay up, but it didn't keep rising. What you want to see is a gap up and then continuation. Very hard to find it. Can't think of a company off the top of my head right now, Brent. But yeah, I think the news from Moderna was probably helpful to the healthcare industry. I think that also starts to get a little bit of a bullish sentiment around that.
Yes.
Hey, we're finding new cancer treatments from this company. What does Eli Lilly think? Are they doing something? Is there some trial out there that might push the cancer conversation in a more positive direction as well?
Yeah, and I'm no expert in this area, but there's been obviously a lot of promise for genomic-based type medicines. There's been more potential and promise than actual realization, but this is another step in terms of realization there on that.
Yeah. Can I give a real quick call out too? I saw a question. Somebody said, when's Jeffrey going to be in Orange County? I'm usually in Orange County once or twice a month. But for those of you across the country, there are regional trading consultants. We're directors here at Charles Schwab. We're visiting the branches at different times and different cadences. You also have something called a senior engagement manager. And those are individuals that are meeting with clients in person, having a conversation, sitting down. If you want to go through Think or Swim or talk technical analysis, they're available. Best way to figure out their schedule, reach out to your local financial consultant or talk to the branch manager and say, hey, when is my regional trading consultant when is my senior engagement manager going to be back in town, and ask them about setting up a meeting. Sorry, Brent, just wanted to touch on
No,
that and get
I'm
that
glad you got
answer.
that in because I wanted to get that in before we're done, and we're basically done. I'm just, as we're wrapping up, everybody, let me just mention a couple things. Maybe more than a couple, but one, last question. A question was, can you talk about the seasonality in the coming month if you have time? Jeffrey actually mentioned that at the beginning of the show, and that was September, not traditionally a good month here in general. So there's a quick answer to that one. Number two, make sure you follow us on the Trader Talks channel. It's easy. It doesn't cost anything and allows you access to a lot of different webcasts, a variety of webcasts that we do here. And if you like the session, you do us a favor if you click on that like at the bottom of the page, the thumbs up. Remember, there's a survey link at the bottom of the chat, excuse me, in the chat there. If you'd fill that out, we'd appreciate it. Jeffrey, thanks for joining me today.
Thank you for having me. Always a pleasure getting to collaborate with you, Brent. Great way to start the week.
Awesome. Great. Well, thanks, Jeff, and thanks to each of you for taking some time out of your day. And I hope this is just the start of a great week for you. We'll talk to you later. Bye-bye, everybody.